Hello everyone and welcome back to another video. Please do consider subscribing. Thank you to everyone who has subscribed so far. Let's keep this up and keep it moving. Alright, let's get right into this one. This is a local Massachusetts, same state where I live, native. This company is headquartered in Massachusetts and it is a machine learning, vision machine kind of company, and it is Cognex. So Cognex is a company that, again, it does a lot with like engineers and whatnot for vision, for machine vision, for like that's just it's an engineering company that makes tools for machine vision. So it's like barcodes and scannables and inventory management, stuff like that. So with that being said, this stock right now is at about $33, and there's about 20%, close to a 20% upside, which makes it a moderate buy with 5 buy ratings and 4 hold ratings. Let's look at the stock analysis for it, and we can quickly see once this stock analysis tab loads that the smart score that tip ranks give it is a 4. So that's not very good. I typically, say in my videos that 7 and above is really good. Below a 6 is iffy depending on the company. I would actually say that this is a good company in my own personal opinion, non-investment advice opinion. I think it's a pretty good company, and we're going to look into the fundamentals right now. Starting with the income statement, we can actually see that they have grown top line revenue for the most part pretty consistently over the years. They just recently, at the end of 2021, hit 1 billion in top line revenue. So that is very good. That's what you want to see. And with that being said, they actually are profitable as well. They had a net income, which was the highest ever, of close to about 280 million out of a billion. Again, that's about 28% profit margin, give or take. Let's shave off a few basis points there, whatnot, but that is pretty good. That's exactly what you want to see, and that is something that we are expecting of a company like this in technology, in robotics, in machine learning kind of play. So with that being said, let's their balance sheet. They actually do have a really strong balance sheet as well. Total cash is about 186 million at the end of 2021, and we can also see that total current assets of about 639 million over total current liabilities of about 188 million, and that is what you want to see. That's really good working capital, about 3 times what they need, a little bit over 3 times what they need. If we actually look at their total liabilities, then we can also see that they do not have any debt. There's no debt on the balance sheet, and that's another really good thing that we want to see. And that's just something that, again, no debt, income, of about 28%. What could go wrong with this company? Who knows? But at the same time, I like the fundamentals, so I rate it higher. I would have given it higher than a 4 score. That's for sure. Let's look at the cash flow statement, and if we start to scroll down, again, we can see that there is nothing related to purchase or issue of debt. They don't buy back and they don't issue it, and that's really good. Equity repurchases, we can see that they've bought back about $161 million last year. We can see that dividends, they slowly have, minus the 2020 special dividend of about like over 200 million, which is what it was. Actually, it might have been 300 million. They actually consistently did grow their dividend, again, not counting the 2020 year. 2021, they still grew over 2019's, and we can also see that they have made like some acquisitions. They've also bought back some of their debt, like some of their bonds, purchase of their investments, and then the sale of bonds and investments. That's really good to see as well. They basically, issue and then buy back, issue then buy back. And so that's what we want to see. And look at a portfolio of Cognex. Their data starts in November 1989. And if you input $10,000 back then, you would have about $822,000 today, which is good for 14, percent compared to the S&P, which had about 193,000 or about 9%, which again is nothing to sneeze at. Like we'd absolutely take that still. And the fact that we have, like a 2.5% inflation rate, so the compound annual growth rate, inflation adjusted, is still 11%, almost 11.5%. That's really good. In the S&P, you'd hope to get close to 10% over a given long-term time span. So that's just what you want to see. I really like this company. I think it's pretty good. I don't own it, but I would consider buying it myself at these prices. I do think that it will go up, and I do think that it is a really well-run company. Thanks, guys, and hope to see you soon.